This conference will now be recorded.
Hi everyone, it's Patrick from the Adamas Principle. The time is about 20 to 9 on the 18th of November. Welcome, thank you for tuning in to this week's show. We have Beat in the house.
Hi Patrick, how are you?
I'm very well. I had a very good week, just on Thursday really, and we'll come to the Brexit circus in a sec. But we've got a lot to talk about. It's jam-packed as usual, and I just want to quickly do a very selfish plug coming up. We've got a one-day foundation. We just launched it. I've blogged it on LinkedIn. It's a one-day foundation. It's in March 22nd, 23rd, 24th, 3 separate days. If you're brand new to trading and you just want to get a taste, get the essential basic tools, this is for you. If you're retail trader for less than 3 years and time is your enemy, this is for you. It's, making sense of macro, technical simplicity. We've got some rock star traders coming down, and potential funding as well. So as you know, we've done the masterclass. That's thorough, it's full, it's complete. It's a 3-day intensive masterclass. What this is, it's just the building blocks, the foundation, the basics. So message me if you want to know more, and we'll just take it from there. So right, without further ado, what a week we've had, isn't it? I mean, and we're going to start with Brexit, my favorite subject, with the Brexit circus. How was that for you, Beat? What happened?
To be honest, I'll be right honest with you. I haven't touched sterling. I wouldn't even touch it with gloves right now, if I'm honest. But I was a bit lucky that we had this sort of little risk on move early in the week up to 73 in the Aussie. Sold a bit of risk into the rally, and then we had Rob's resignation. So it's always nice to make money for the wrong reasons, but I take it. To be honest, it's going to be with us now for the next several weeks, which makes the entire trading a little bit more difficult. In particular, that we have sort of stories that would actually lean the other way in terms of the dollar, and I guess we come to that later on. So you can't really embrace maybe the sort of latest developments from the Fed completely, given so let's say we have the 1922. Obviously it seems not to have the 48 letters yet, but they're still convinced they have it by Monday, latest Tuesday. So that means even this little recovering cable, and I guess that's why it sort of sold off into the weekend on Friday. People just know the story isn't over, and it might, if you believe all the discussions I listened to over the weekend, these letters going to be in. Now the debate is whether or not actually they get enough votes to get Theresa out, which I think there's a big doubt about that right now. The risk for the plotters is if they don't get the votes, the law says they can't get a no confidence vote for another year. So now the question is, even let's say we have the 48 letters in the Monday, Tuesday, whether or not they pull the trigger for the vote. I think it makes no sense to pull the trigger for the vote if you are not certain that you're going to win the vote, because otherwise you're just trying to make a point, blah blah blah. It's a little bit more of soap opera, which doesn't really make a lot of sense. So sterling is probably going to react badly once the headlines hit about the 48 letters to be in. And from the chart as you have up there, 126.65 or thereabout is the year's low in cable. So that level everyone is going to be watching. I really don't know, I'll be honest. It depends now. The market got a bit tired on Friday to run with either story, and I think the market get to a point where they say, like, you know what, okay, we have like I mean, this was the craziest week I can remember for a long time. Had Sky News up, I have the Squawk Box up. Every 2 minutes, one journalist would tweet something, and I mean, it's been just ridiculous. And I think the market now is at the point where I go like, you know what, bloody hell, just tell me the truth or the real news. And so maybe we be a little bit less volatile next week in a sense that we're not going to react to every rumor or every tweet, and are actually waiting for the real news. So, but like we said before we went on live, maybe you can't dig in right now. We can't probably just think like, oh, this doesn't matter, or I play this or I play that. Brexit is going to be with us until DEC 15, the latest, if May doesn't lose any no confidence vote. So up to that point, we just don't know. What I was listening today as well is, and some of the guys in various discussions I was listening to are actually quite experienced journalists from Times and some of the other papers. They are still convinced that May is 50 votes short to get the Brexit bill through Parliament. So that is really the tricky part. So yes, we might have some noise during the week on a no confidence vote or the 48 letters, or do we get a vote or do we not get a vote? But the true question now is, Parliament, it's not until DEC 15. So that's a real pain in the neck for us in terms of, whatever view we try to have. We just always have to price in the problem that sterling could suddenly just tank, be it for a no on the 15th, be it on a no confidence vote, and May goes out. I don't even want to go as far as talking Corbyn, because otherwise my Sunday is going into a really bad mood. But it's all risks that are there, right? So we have to sort of think about it, and I really don't know where we are, I'll be honest. Gut feeling says there will be no confidence vote, or if there is one, she's going to win it. I think May has gained a little bit of, not massively, but I think there were a few people on the fence which probably go like, you know what, maybe she has a point. She's definitely gone up in my books, the way she fighted this week, the way she sort of come out and go like, you know what, that's what it is. We always knew we're not going to get what we want, or all that we want, and this is the deal I have. Take it or leave it. And I must admire her, how she's fighting. And I think some other people noted that too. So maybe, maybe she just grabs through to mid of December, So I just can't trade sterling. I don't see any value in trading sterling, because you try to guess the next headline, and I don't think we're in a business where we do 50-50s. And I don't do 50-50s.
Yeah.
That's what it is for me, 50-50. So I just can't trade sterling this week.
Well, it's really good you're saying that. I got I sold cable around 130.50 on Thursday, but I did it for technical reasons. I was selling into any after the during that yes time on the cabinet. And I'll come to a bit of that in a sec. But the thing for me on the leadership is I'm not trade. I might dip my beak into cable again this week, but I'm not going to be reactionary on any leadership vote of confidence or anything around that, because I think that's done. And the reason is who's going to replace her. If there's talk of a Bojo, i.e. Boris Johnson or Rees-Mogg, they're hugely influential. So that's not exactly a selling cable story. So that's going to be a bit of a mess. And for me, it's all about the 15th of December. It's really clear, because it's any inkling on what Parliament is gonna vote on. All of my instincts, all of my feelings, everyone I'm talking to says no. And if that happens, that's when it gets really tasty. That's when you've got 4 very, very important options. I blogged it last week. I lifted it from BBC News, and they've got quite a good simple breakdown. If Parliament says no, you can either renegotiate, you've got a second referendum. I wonder where cable's going. 150, definite. General election, massive.
110.
Yours. What about this, mate? Close second, no deal.
Yeah. I mean, on the BBC, someone said actually something. He was a guy from the Times who actually said, if we get a no on the 15th, means like we have to rename the Remainers, because after the 15th we actually left the EU, right? If we vote no, we're gonna leave the EU without a deal. So the Remainers then become rejoiners, right? Because actually we can't remain, we actually have to rejoin. Right? I actually found that quite funny. But it just shows, and he said the Remainers are working overtime because they realize that the time is actually indeed running out. And that's probably the background on. So I guess we're going to get May on the tapes every day now. I think she realized she was on Sky this morning.
She did Sky. She was in the Sun on Sunday in the UK. We have a tabloid paper that is. We used to have a very bad or good, in my view, bad, but a good tabloid called the News of the World. It got into trouble, and they renamed it the Sun on Sunday. And she was in that. But also LBC. That's a very big radio station in the morning. She was on there. And you're absolutely right. I think we're going to be seeing a lot more of her this week. So you're not touching cable. I might touch cable, but I just want to talk you quickly through and what I did last week. I think it was around here. This here, if you can see my arrow, is a classic top. Okay, so if I just pull this down a bit. So it was around 130.20, 130.30, couldn't really stay above, and I think I sold up to here. I nearly got stopped out, and I think it was around, it couldn't really stay above that 30, 60 area. When that was after yes. It happened, and I'm thinking that is failure. That is failure. So I was, that was great. And then the couple of resignations. I mean, I caught some of it. Obviously, I didn't catch all of it, but that's fine. I think I let some go at 129.30 area, and then a little bit here. But all I'm saying, if you're like me, a technical trader, but uses macros, Confluence, you can still trade technicals, and often if you're trading something live. I generally look for fades or failures. That's just, it served me well over the years. And now we're kind of still in the downtrend there. And I quite like that 129 big figure just because it's 50% and 100-hour moving average. So don't put your house on it, obviously. And I might be doing that. I sell a bit up there, but then again, anything can happen, and keep it tight. I mean, my stops are quite tight at 20 ticks. So
to be honest, that's the sort of main reason I didn't touch cable, because I just figured out the volatility. To be honest, I saw the line and I wrote about the line all week. 50, 60 up there. But I saw it, looked at it, and I felt I probably should sell, but I didn't. I just got, what? No, can't be bothered. And that's why at the moment the short-term trading side, because in the day trade I use tighter stops. I just figured out it's just too volatile to work with tight stops right now. So that's why I didn't really touch it.
Well, that's great. So that's our Brexit. We put that to bed. There's no other, nothing more to be said for that. Thank you, Beat. That's absolutely fantastic. Good luck next week. Just keep it tight on Brexit, and cable rather. So the second subject got is the dollar topping out? I mean, early signs, or are we both barking up the wrong tree? Now, you highlighted this to me, I think a week or so ago, and all I will say is, yeah, yields are what, 3.08 on the 10 year.
Yeah.
You know, and dollar yen's moving, which is a bit of a bit of a turn up for the books. Obviously we had, going into the next topic, Fed watch. We got some hawks coming out with a not so hawkish comments. So all of that is, I mean, for me, I wouldn't say the third hike off the table 2019. I mean, I'm definitely not going to say December's out of the picture.
Mm.
But it's that third hike, I think. Is it off? Is it on? But what are your thoughts, Pete?
To be honest, like you just said, it was postage first that made me think on Thursday night, or yeah, Thursday to Friday. Then I just suddenly really, had my sort of thinking cap on, and that's when I wrote the piece I wrote on Friday morning. That I just start to get the feel that, I mean, the feeling has been with me for a few weeks when we discussed it multiple times in the past few weeks, that there's no data surprise on the upside anymore. There is okay data. Some actually come on the downside. Inflation isn't running away. It's where it should be in terms of what the Fed is looking at. But, there's definitely no reason to reprice the dollar to the upside. If we just leave the risk off side away for the moment. So there's no reason for the dollar to rally on the back of the Fed or the US. So the story about the US economy is well priced. We know that now for God knows how much. So we almost running kind of dead. And I think if it weren't for the mediocre data out of Europe, the dollar would have probably already sold off. But because the European side, in particular, the German data started to sort of leak. They say it's probably just temporary, but who knows? It's just a fact that the data is weaker. So the dollar probably just held in because there was no real alternative or no other story there. But we just stay where we are. And the other thing I didn't like so far is we broke 115 in the euro on the back of the Turkish crisis. We broke 113 on repricing Brexit after the horrible move in sterling, and when suddenly the market woke up, a horrible no in Britain actually means it's bad for Europe. Okay, let's sell some euro. So we have broken 115, or two big levels in the euro, really not for the dollar reason, but for European reason or shocks or whatever. Turkey was like the worry about the European banks, and the 113 break was just a reprice of Brexit, or price in some no deal Brexit risk. So it hasn't been a dollar, so that's another reason why I'm just being probably a little bit hesitant and worried, not for my risk off positions where I'm short Aussie dollar or some other sort of risk dollars long. I probably wouldn't be long dollars. Euro, I didn't have a stale position, for ages. Yeah, I sell some rallies and I sell some resistance for a day trading perspective, but I didn't have a real dollar long for the dollar reason. Let's put it this way. Now we're getting to Friday, where after postage the night before, where Clarida is the vice chair coming out, suddenly talking somewhat less hawkish, highlighting global growth concerns, highlighting that the neutral rate debate is coming, where postage said as well, we're not so far from neutral, maybe we move to neutral and pause. Now comes the, we had a very strong reaction on Friday, and I really managed it well because I jumped all over it, because it's exactly the story I was writing about at 9 a.m. on Friday morning. And here comes the afternoon, and he was just served me on a plate. Now, where from here? So we obviously gonna. I didn't see any Fed speaker on the diary for next week, which doesn't mean like there are not any. I didn't see any, or at least not the hawks. We need to probably see a few more hawks. What I don't know yet, or don't have a view about it yet, is if this is the start of tuning down for December, or if it's tuning down for just a rate path, as in for 2019, like what you mentioned, going from 3 to 2, or at least not pre-commit. The other thing we shouldn't forget is Powell is under Powell, we have a Fed that is clearly watching data. It's probably the first Fed that is truly watching data, while Yellen watched the equity market, which Powell is not. Bernanke was watching the equity market, which Powell is not. And that's why we always talk about the risk off. There's no Fed put. So that's another thing. Realities, interest rates reacted. Interest rates are lower. So they taking, and it wasn't even, we didn't really have an equity sell-off. So there was no reason for bonds to be bought on Friday in terms of the equity side. So it seems that the interest rate market is listening, and has maybe sort of topped out already at the 3.25 level way before that as well. And maybe we keep an eye on that 3%. If the data remains a little bit mediocre, if we get a few more Fed speakers. So I'm on high alert. I think Friday could prove to be a very, very important day, not to be ignored. But, and here comes the big but, and that rolls back to what we discussed just before, Brexit. If you have cable that gets, let's say we have a no confidence vote next week, cable is going to be under pressure, testing the year's lows. It's very hard to see euro staying up here if cable going to test 126.5. So that's going to make the trade a lot more difficult. But I think we have to be on alert. I think the Fed, something in the Fed is changing. Not sure exactly what the true worry is, whether they just notice, data starts to cool off. So maybe it's not the time to hit the accelerator. Inflation obviously is not running away. We had just oil collapsing 35%. So obviously, that's not going to be the trigger for an acceleration on the top side. So maybe they just got like, keep things a little bit, open.
Yeah.
Maybe not ready to take it off yet, but slowing down the language and telling the market, it's between the lines. We're not quite sure yet. Maybe that's what they're trying to tell us. So maybe we shouldn't overreact. But I still think Friday was important. It really was.
Yeah, I agree. And they're just giving them wiggle room, really, on the communication without painting themselves in a corner too much.
Right. Yeah.
I think it's 4 weeks away to the December hike. I think that's too early for them to start changing tack for that. It's a slam dunk. It'd be carnage if it goes. If they don't hike in December, it'll be carnage. I don't know what the curve is, but it's over. I think it's still over 70%.
Yeah, I didn't watch it either, but I would agree. It's probably too early to take December off.
I think it's probably definitely 2019, but it could just be it's a nice thing to have a bit more wiggle room if things start turning, and I think that's probably what it is. I do, on talking about CPI, because it's one of the topics actually. That's interesting, isn't it? Because obviously headline massively weak, but I don't see the Fed getting too worried about that just because of the rate of change for oil, which is basically headline CPI globally. So core is pretty stable. I mean, hasn't really changed that much, and that's the one that the Fed's looking at, I think. So I don't see any worries in CPI with the headline coming off. really, because it's just an oil thing. If oil was bouncing, then that would be strange.
Yeah.
But oil's just falling out of bed at the moment. But yeah, I think definitely on my radar is any more speakers, and yeah, more from those two last week. But Powell is the big guy for me to I'd like to hear him again, because I haven't heard him for a while, just to see where he's at.
He
Really.
was out there during the week with that big sort of Fed review, and if
Okay.
I'm mistaken, he did not as clear as Clarida did, but he made a few hints towards global growth. Again,
Okay.
less clear. That's why the market just, to be honest, the problem we have as well, a few stuff that was going on during the week last week was just kind of lost in translation because of the huge focus from Brexit and the big drama that was going on in the UK, given, not that sterling is the most important currency in the world, but it affects the euro as well. So I think the market was just, for once, just dropping every other story that is out there,
Yeah.
And it looks to me even the Brussels probably even told their own EU Commission to just shut up about Italy, because they did make no comment that Italy just resent the same budget that they put in the first time. So usually that would see a lot of headlines from the EU Commission to shoot at Italy for having the courage to send an unrevised budget back in. And almost even the Italians were very quiet. So it's almost like, no one wanted to rock that, either hide bad news in the big Brexit mania, or just Brussels just probably thought like it's not a good timing to have the problem with the UK start to really be aggressive against Italy, because at some point suddenly some countries in the eurozone go like, what, had enough of this, right? So I think there was a bit tactical silence going on last week there as well. But yeah, I tried to find the piece from Powell, but he wasn't as clear as Clarida, but he made a few references to global growth. So that global growth topic seems to pop up a little bit in the Fed. Maybe not yet in a sense of changing policy, but definitely what we're not going to see is an acceleration. I see no reason for an acceleration.
Yeah. Well, we know China's, slowing. I mean, there's no hard landing still, but that narrative from a few years ago about China having a hard landing, I think, was it 2012 or 2014? I can't remember, but it was something. I think that's they've got credit problems. They've got the shadow banking's still, zombies. They've got a lot of problems there. So I think they're trying to, from that Tang piece at Goldman's, we were talking about another thing about 7 going and all that stuff. But I think in a broad sense, they're trying to deleverage credit and debt. They're trying to really, and that's why they've got certain things in place that they're trying not to spend so much money, I think, to fuel that. They were 10-12% GDP. That was their targets for like year on year. That's like, So so the things are moving there, and obviously things like copper and iron ore and Aussie and stuff like that. If that all kicks in again, it's going to be interesting for domestic markets, developed markets. Sorry. Great. Well, the final thing really is risk plays. I think we're all still good to go on selling those risks.
Yeah, to be honest, I mean, I'm back short again, Aussie yen, Euro yen, as I mentioned to you before, when I bought euros on these Clarida comments, I just kept somewhere, rolled my Aussie dollar shorts into a temporary Euro Aussie parking space just until I figured out what happens with the dollar. Even though this level in the Aussie would be a fantastic level to sell Aussie, but not if the dollar stays weak.
Yeah, that's it.
So my third, because I'm following two big stories. So one is my still high conviction story about risk off, which I think equities are going to go down. The speed of equities might then be a little bit of a question when it's just a slow grind lower. How much is risk going to sell off? We have to. It's impossible to answer at this point. And the other thing is, where I got my conflict on Friday is the dollar really topping out. So which means there are two conflicting stories. Both are, the risk off story is for me maximum conviction. The dollar story is actually gathering pace in terms of reaching my top conviction, which means I would have to be short risk in the crosses rather than against the dollar. But I'm not quite there yet because, the way this could unfold is we could still get another dollar rally from risk off before then these Fed stories start to get a pace. So it's a bit of a timing issue right now, which I think where these two stories could still, maybe the Fed story is a bit lower down, the risk off story is a bit higher up, and we could get another sell off in Aussie dollar or rally in dollar Canada and dollar EM. But if I look at things like dollar Turkey, dollar Rand, they just participated in that dollar sell-off quite strongly. But I just want to mention, something which is really another thing that's close to my heart, which is dollar Rand. And I sent something out over the weekend if you've seen it. So this land reform seems to be a done deal, if that newspaper report was true. I'm a very cynical person when it comes to emerging markets.
That's why I like you, Beat.
And to be honest, not that it's tradable, but since a few years I always thought like dollar Rand is going to 50, and I'm still standing by that. I do really worry that the land reform will be the start of bad things to happen in South Africa, and I could not. So maybe I would have to play Turkey Rand, which is something I've been looking at for the last 2-3 weeks, just in terms of if you don't know whether it's going to be a risk off or risk on or whatever, and you actually have a positive carry in that one as well. But so if I look just at dollar EM today, they reacted strongly to what Clarida said, which is okay. We take some pressure off interest rates, which obviously is positive EM. Then we have to close the circle and look at equities. Equities did not react to the hype around, the Trump saying they're going to be a China deal. We had a quick rally, couldn't hold it. We had a dovish Clarida, which usually a dovish is a bit a strong word, less hawkish, lower interest rates. The Dow didn't rally, right? As if the market understands, okay, if the Fed is getting worried, they're worried due to global growth. A global growth issue means like it's bad for equities. So almost as if the market understood the message. So we could be in a sort of very odd conundrum of lower yields taking pressure off dollar EM on the top side, then stocks are rolling over, and then they're coming back. But I think it's very early on to make that conclusion. So I just keep it simple. I'm bearish stocks. I'm going to stick to traditional risk-off crosses until I'm proven wrong. That's because I'm sure that 130 in euro yen for like 2 weeks never got any, didn't get any close. Aussie yen is still about 0.7% of the sort of big area. So again, no big threat there. So while it works, even the bounces in equities we had never really meant a big bounce in Aussie yen. Dollar yen, as you pointed out, for the first time participates, with the dollar story.
That makes sense, doesn't it?
Yeah. To be honest, we argued like all these last few weeks, dollar yen is tricky. We have the risk off on the one side and we have high dollar yields on the other. Suddenly we have maybe two things pointing in one direction. And I sent out a chart on Friday, which I think dollar yen is going to go down to 108, 105. I really think dollar yen is going to get absolutely destroyed. And that's when euro yen is going to be below 120. I really do. You know, maybe dollar yen is the trigger. It's going to be tough in the beginning because I guess the good old semi-officials in Japan may try to fine-tune that clever dollar yen again, but something didn't feel right for weeks in dollar yen. I never could put the finger on it. And if now yields have actually topped, maybe we finally get the last key, you know, and dollar yen is maybe due for a leg lower. And then it's probably going to be the interesting case where I could be dollar bearish and risk bearish, because if dollar yen takes over as a driver for Aussie yen and euro yen, then I don't have to worry too much about, you know, euro dollar, Aussie dollar, all that stuff. So I'm gonna stick to the risk of crosses for the start of the week. So even my Aussie dollar short is currently a synthetic euro Aussie long. And just want to see a day or two what's happening to the dollar. Because as I said, for me, Friday was important. The only last thing I want to throw in, and that's another curveball, is Draghi, you know, which made a comment late last week about, you know, if needed, we could revise the inflation outlook. And the one thing I would say is that the CPI data in Europe, the oil price made 1.05% to the headline inflation. If oil price stays where it is, the November impact from oil to CPI is 0. So that means we're going to have a very big downside risk for November CPI in Europe. And you know, one thing I never understand is I think CPI in Europe is just too correlated to energy. So something in their basket I don't like. And the second thing I still don't understand, and I actually took that up with the ECB on multiple occasions over the last few years, is that they still stick to a one mandate. You know, I just don't understand why the ECB, such a big economic area, is just having one mandate, which is CPI, that they don't have a dual mandate like the Fed has or something. So I don't get that, and I think it hinders the ECB over time to do what is needed to be done. But that's it. You know, it is what it is. They're so focused CPI. We could have downside risk in November for the November data in December for you know, downside risk on European CPI, and suddenly this whole story between the Fed and so I mean, worst case could be euro goes back up to 115, 116, whatever, and reprice a little bit the Fed, and then we have a downside surprise in European CPI, and the euro is like 114 again, and the divergence that was just about closing is opening up again, and we continue to be in a 113, 116 range in euro for another few weeks. You know, I mean, reality is it's just very complicated. There's so many things are suddenly, you know, a lot is moving, a lot of core stuff is moving, and all in itself is very important, and it could be a coincidence that everything moves the way, you know, less hawkish Fed, the dollar tries to go down, and then suddenly a little bit more dovish ECB and the dollar comes back. So I think it's a little bit of a mess even on a macro side, not just on the day-to-day side, or not just because of Brexit, but the signals that we are getting are a bit conflicting as well. But above all, conviction of short risk hasn't changed. I still absolutely, you know, I actually leaned out of the window and I gave two friends my targets in the Dow. I can share them with you if you want. And so my first level, my first target is 22,000. Can write that down. Yeah. My second one is 19,000. So that's a sort of 12 months plus. You know, usually equities need a little bit longer. So I give it 12 to 18 months. I know it's you know, it's not usually very helpful in terms of trying to make a call for 1.5 years looking forward. But
That's good.
I'm well aware that the Dow is not going to tank. There's no need for equities, at least at this stage, to go into free fall. That's why it would be stupid for me to say, oh, we're going to be at 22,000 by March of 2019. That would make no sense.
Yeah.
But the one thing, and that's the last thing I say in equity, is in my 35-year career, I've never seen a move unwind orderly. And I still think the equity market is a bubble. So is some of this other stuff a bubble. And once it starts, but I still stick to a sort of more medium-term forecast. But once it starts, it could suddenly just roll. You know, it could be the snowball and the avalanche. And gut feeling is it's going to be at 22,000 a lot quicker than I forecast.
Yeah.
Because I think part of the move will be more chaotic and more disorderly, because it's not going to unwind orderly. I don't think. I've never seen a bubble unwind orderly, ever.
No.
And
No.
this one is not going to be any different. But while it's dancing around here, you know, it's probably no point to go like, oh, I'm super bearish. I think it's going to crap out 5,000 points. It's probably not that, you know, it doesn't help anyone. But that's my sort of deepest gut feel. At some point, it's just going to accelerate down. That's when dollar yen is going to go 105, 108, wherever, euro yen. You know, I didn't actually look, you know, too deep into it, but definitely sub 120. Euro yen is quite high if you look at the move we had in the last 2 years. So it's like, you know, maybe you have it there. If you,
euro yen.
Oh, that one doesn't look that high. Can you add a little bit longer time frame? Is it? Oh, Jesus Christ! I have to review my whole. Yeah, okay. I like that one a lot better. Oh, that's 2012. Yeah, yeah. So that is basically the picture I look at on the macro side. In dollar yen, euro yen. I know the low goes back. What's the low there? 2016 ish. What's the 105? Yeah, it's 2016, isn't it? Yeah.
Yeah, 2016.
So if you think we're gonna break, you know, we're now in this sort of consolidation, sort of whatever it is. If we start to break down here below sort of 120, what did I have on mine? 126 and a half or something like that. If you start to take that area out, I just think, you know, there's a lot of room, and you should like it because the moving A will be below the moving averages as well.
Where do I sell? Where do I? That's it. I'm done. That's it. Yeah.
No, but the thing is, yes, you know, everything we talk about here is not going to happen next week. But I think you've got to have some of those positions, at least small, which I don't have massive, because I never managed to sell where I wanted to sell. So I have like currently just 25% in Aussie and in Aussie and 50%. Euro yen, I'm still only at 25%. Because I never got that, when we get up to 130, we never got that 130, 50, 131 move, which in the election night, which I just had to leave a little bit of room in case equities go mental on the top side after the election. And so I missed to add a little bit more risk. So that's why I'm pretty flexible still. But I think you need to have a small core. And that's how I traded the last few months, you know, sell the rallies, you know, take some stuff back in the dip, manage a core position, core short, always stay short some. I think that's the point. We get a bit, you know, too cozy here with, you know, every time we make a new low, we have a nice little bounce. The day will come where it's not going to bounce anymore.
Yeah. The only thing I think we spoke offline is I bought Aussie dollar. This is not like me because I don't like buying risk, as you know.
It's interesting that you buy before the 73.30 break.
I know I'm a bit funny like that. Funny, stupid. I sort of, if I see momentum, what I tend to do is buy before the break.
Yeah.
Because I see sometimes, often the break is never confirmed and it will always retest because there'll be shorts trying to get out. So what I try and do is I just hit it, and then usually I'll take, and this is what sometimes, for some of our retail followers, if if your conviction is one thing, like we're both risk bears, if you want to buy into risk, I look for the free trade. So I've covered 20 ticks already,
Yeah.
and I think I bought 16s actually. So we're on now around 30 or whatever, or I can't remember. I'll have to check. But so basically, it's a free trade. So
Yeah.
even if it gets stopped out, that's fine. But I just see this. We closed, and then on euro dollar, the way we closed on Friday, this is quite triumphant looking.
Yeah.
This is. I mean, I'm offered at 55s, but
What's this? Is this an hourly or a 4 hourly?
this is 1 hour.
Okay.
Yeah, this is 4 hour. So there's the 30. There's a bit of a level there for me because it's down there and
I have to
it's
disappoint you. Aussie is 10 given. So Aussie, I remember I sent this China story out with pens. So they
Yeah,
have a really bad meeting there. I'm not sure if that's the reason, because suddenly I see Euro Aussie is going figure bid,
yeah,
156. Aussie is coming off a little bit. Euro is around 0510. Dollar yen is like unchanged. So it's almost like a very tiny bit of Aussie opening a tiny bit softer. Aussie yen is lower,
right.
0.25%. So it's almost like the Aussie complex is opening weaker. I wonder if this is this Pence China story.
Yeah, probably.
I read it, and it's not nice reading if you try to believe in breakthrough on the G20.
Yeah,
And the funny thing is, he starts to. I'm not sure if he was sent on the road to deliver the message so that Trump can be the nice guy in the G20. But the interesting thing is, it's not just trade. It's now about Cold War with China. It's about
yeah,
traveling to Asia to tell the Asian countries, listen, you have to decide between us and China, like almost like inviting other countries in Asia to be on the side of the US. So there's something very funny going on.
yeah,
And whatever deal or no deal is going to do, I still don't think there'll be a massive breakthrough in the China-US talks.
yeah,
I stick to that view about the video from Navarro. Even though the only thing I would say, they silenced Navarro a little bit. I think Navarro was very controversial in some of the talks, so almost a bit too aggressive. So they sidelined him. So he's still the sort of trade representative for Trump, but I don't think he's at the meetings. That was the only time when I got a little bit worried when they removed him, because he was like such a hawk. Whether they're trying at least to negotiate something, but I think it'd be on a small scale. I think Trump Trump's idea about the US and America first is that he's going to get jobs home. He really want to clip the wings of China, and so that's why I just think the market could get very disappointed on this. But we shall see. Another 2 weeks to the G20.
yeah. That's great, Beat. Thank you very much. Great session. Please, if you agree or disagree, leave Beat and myself messages in on the comments board. Finally, last but not least, Beat, you're going to say you do an amazing daily commentary. Just a few words about that.
Yeah, thanks very much, Patrick. Yeah, what I do every morning is I just send the sort of core currencies out with a little research piece on it, sort of theme of the day, the trade ID. I sort of try to as well send out, when news is out, what my take is from it. And then then I write my 2 cents piece, which was a rather lucky one on Friday to point to the right story, but sometimes you need a bit of luck. So if anyone would be interested in the sort of work I do, just message Patrick or myself, and we can talk about it.
Absolutely. And if you'd got that 2 cents piece, you would have made a lot of money. So it's well worth it. I've seen his stuff, and it's there's a ton of work that goes into it. It's amazing stuff.
Thanks very much. Appreciate it.
Right, well, that's it for my position and how to trade FX. Watch that risk and have a great week. Thanks very much, Beat.
Thanks, Patrick. Thanks for having me. See you.
See you, mate.